The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 14th of May. We're looking at the Dow of 28 at 42,175. Let's just see if UNH is helping today. A little bit. It's up $8. So I need to talk about some things that will take a moment. But in the meantime, back at the ranch, let's go through this Chapman Wave instant restart. I like to take away anything that's now redundant. So let's get the rectangle formation served. This is the large rectangle. I've done webinars on this. There's the cup formation, lopsided like a gravy cup formation. That's in place. We've already achieved the left side, right side price time match. There's the Chapman Wave inside wedge target repellent line in the Dow daily, and it goes all the way to there. And that says that by the 19th is next week, is it 19th? Next week, May 19th, Monday week. Monday week, is that right? No, it's 7 days. 5 days time. Okay, this coming Monday. There should be an attempt to get to the 42,821. We might have done yesterday, but of course UNH spoiled that. But the weekly chart has got a very nice pattern, but the 9 has not yet crossed positive. The MACD hasn't crossed positive, so it's a work in progress. The instant restart says that within 3 bars after you make a leg D, if you make a peak D and within 3 bars after that, you go to a higher high, that becomes E, and you can think of it. It doesn't mean that it's going to be, but think of it as an E/A, an alternate count. Why? Because if all the technicals are strong, which they are, unless the price closes below the trough of D, in this case, if the Dow closes, actually doesn't even have to close, unless it goes under 41,150.73, chances are that this could continue higher to another series of peaks. That'll be amazing. Now let's go to the S&P. It's the same thing. SPX. There we are. The S&P is only in leg D, where that C is. That was where some of the indices had an alternate count, but this is still a leg D. But look at the spectacular move in leg A. I mean, all-time high 61.47, slumps down to 48.35, and here you are at 58.93. I mean, that is, and look at that. The 9 is climbing sharply. The 14-period moving average in the weekly is climbing sharply, almost about to cross positive, but it hasn't yet. And the MACD at this particular point is unchanged. So that's the 0% line. It's now down minus 4.38. I didn't even see that. Why is it not showing up over there? Well, minus 4.38. If it goes positive, that's going to be a big plus for the weekly MACD. Stochastic still lagging at 60%. The on-balance volume has me worried because it's really lagging a lot. But in the daily, it's just slightly overbought. So this is a very strong move. And look at that weekly chart with that beautiful candle from last month. And we're way above it. Nice action. Good. I'm anticipating that there's going to be some choppiness today, and I would not be surprised by the end of the day if we actually are closing down rather than the usual up. 1, 2, 3, QQQ. Here you can see that the Qs have got Chapman Wave instant restart, but this is a very strong leg E. And what I tend to say in this particular pattern, when it's just a very small instant restart, D goes within 1 bar or 2 bars, goes to a higher high. The higher that this leg goes in E, think of it more as E, and the alphabet just continues. E goes to F, and F goes to G, and then you've got to be real careful because it could be a pullback and then a pop to D. But in the meantime, the weekly chart is really strong. Look at that. So the Q's up $1.21 at 516.79. I did some work last night, and then all of a sudden I had this message that said, have to close down. And for some reason, I've been very good about going to my file, and then I go to back up. This is on TradeStation. Then I go back up TradeStation, and I'll do it throughout the day. I haven't been doing that for years, and now that I'm doing it, I've been saving that because what happens when it suddenly shuts down like that, I lose all the information to the last big save at midnight, and that means that everything I did yesterday is kaput. I have to renotate. It's a shame. It's my fault, I guess. I wish TradeStation automatically saved every single thing that you did, but we'll see what happens. All right. So with that, I'm going to go to the IWM. IWM is trading down $1.36 at 207.29. Right at the left side, right side price time match, 209.23. It went just a little above. It went to 209.23, then 209.61 yesterday, pulling back a little bit. And you can see that's that. I use a different plumb line for each one, but look at this. This is the Chapman wave inside wedge target repellent line, went above it. Now it's touching it. So this is look, everything here is technically good. So I'm expecting just a little bit of a pullback. And this did not go within 3 bars to a leg E. So this is not a Chapman wave instant restart. It could turn out to have a down arrow and an up arrow. That's something separate. But it's not the technique that I use as a Chapman wave instant restart. Let's go to the SMHs. Very important. SMHs, doji candle, 247.14, up $1.58, stalled underneath the Chapman wave inside track. Oops, no, this is the inside wedge repellent line, which is today at 252. And the high today so far is only 249.44. So where am I going to in this particular pattern right now? I'm thinking that by the 22nd of May, there should be a spike above 259.63. That's all that this is saying. Okay? And you've got an instant restart. But as I say, this is really more an extension E, and I will consider it only if it can go higher to an F and then maybe a G, but we'll see. Major support is at 242 right now in the SMHs. I do want to go to, I guess move this over. Had questions about a lot of things, and I'll get to them in a moment. I do want to go to gold. Gold is down some, is down 56 at 3190. I drew this in as an arch pattern. It's a technique that I've been using forever, and it's this particular pattern. We call it the dreaded H. A lot of you know it. It's a pattern that says the price can rally. I look at 3 core patterns, straight up, straight down, that's 1. Cup formation, that's 2. Arch formation, that's 3. And 1 and 2 mix, or a 1 and 3 mix. This is 1 and 3, where it pops up, comes straight down, rallies to a peak A or a B, and then fails and takes out the left side low. We're doing that today. But what happens is, if within 3 bars, it does not close above the left side high. In this case, the continuous contract is 3209.4. If it doesn't do that within 2-3 sessions, I say 2, I sometimes give it 3. I said you could even get a 1-to-1 to the downside. That would target the 3100s. Let's just go one step at a time, because if you look at the GDX, which is the gold miners, that has gone to a dreaded H at a peak A minus. It failed. Let me just draw this in. There's your dreaded H pattern. Look, there's your H right there. And now it's gone below it. I drew in the huge arch formation. I drew in the Chapman wave inside wedge target support line, dashed line. Hasn't got there yet. And where is that line? Where's the low that I'm anticipating? And that low is right there at 45.16.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So the GDX, which is the market vectors gold minus ETF, making this arch formation, and it just nicked the left side low. I'm watching this closely because I like to do one step at a time. If that gets taken out, then I have to consider that the next level of support will be down at the 40 level, and we're at 45.39. Actually, let me go one step at a time. It will be right there at about 40 in the 43s. That'll be the next step. All right, so the GDX resistance is now up at the 47 area because that's where the 200, the 914 just turned pink. That's the area that actually I would even say it's probably in the 46.50 area. All right, let's go to silver. Silver right now, is it following gold? A little bit. It's down 66 cents at 32.43. So let me just show you a technique. Treat this as a little lesson here in Chapman Wave methodology. So I would automatically raise that to at least the body of this candle because that'll be the next resistance. So I had it before and it really didn't break out. But you know what I always say? Time alone, because these prices are moving to the right. Anything that you look at on a chart is moving to the right, either up, down, or sideways, whatever it is. But at some point, if there's a downtrend line, a diagonal, it's going to take it out. Just time alone will take it out. But look at this, how it still remains a repellent zone. And the 914 is pink. And the 200-period moving average of 32.12 is in sight. 3 closes below this says, be careful because you're arching. I'd even say 2 closes, but let's make it 3. Below means that silver chart is starting to turn down. But so far, it's just kind of neutral, not doing anything. I do want to go to high-grade copper. High-grade copper at this particular point is trading down just a fraction, down 0.09 at 463. It's the same pattern almost. So if copper at any point, rather than pushing to the 480s, it's at 463 right now. Actually, tags, it doesn't close. It just has to break under 4.477, and you've got your leg A, leg B, a trough A, trough B, trough C, and you start a leg D to the downside. That will not be very good. All right, let's go to the next thing. Crude oil. Crude oil is trading down 25 ticks at 63.42. So I was asked about it. I was asked, is this breaking out? Is this where you would go long? Would you go long? What would you do? Is it the USO, which is 1-to-1, which is basically the United States Oil Fund LP? Or would you even go to the UCO, which is the ETF, which is the, what is it called? ProShares Ultra Bloomberg. And I can't remember now if it's 2 or if it's 1. I can see it's down 0.22%, and USO is down 0.19. They're so close. Well, whatever it is, I'm going to just give you the analysis. So the crude oil right now, I have not decided anything for subscribers to get into the crude oil. I've even reneged in my promise to myself that we would get into the UNG if it starts to show strength. But that strength is just, it doesn't remain strong. Look at that peak C, and then you come with a pullback that's a little bit more than it should be. It should have held the 914. It should have held the 200-period moving average. Instead, it's below it at 0.54. So I'm just thinking that this area is just, I'm saying for me, not an area that I want to be in right now. Just at the moment, right? I could change my mind. But I like the action because the 9-period moving average in the crude oil has just turned positive. So as a trade, and it's all I can say right now, because my target would be a left side, right side, double U formation that says that you could by the May the 21st, that's about Tuesday or so, a week's time, you could in fact be looking at this trend line, and if it tags this Chapman wave inside wedge target repellent zone, get to 64.39. This is the crude oil itself, and then it's a uptrending line about 45 degrees. It could do that. So as a trade, I'm going to say to you, because you asked the question, you've done your homework, and it seems to me that you are wanting to be in this. I'm just going to say the USO at 69.40. See, I don't, if you had a lot of leverage. So let me just look at that SCO. Let me just double check. I'm going to go down. Let me just go quickly here because it's just worth it because it's a question. UCO is 2 times or 3 times. So you're searching. UCO is at 2 times. Okay, that's fine. So the UCO trading at, let me get to it. UCO trading at 22. I'm going to say yes. It has about a point. I don't think it's 2 points, but I'd say it's got about a point risk right now. But you are looking at it and you are interested. It's the same pattern as the crude oil, obviously. It's just that the vehicle itself that's being used is a 2 times long. So I'm going to say yes, because you've thought about it and you asked me the question. I'm going to say I see about a 1.5 point risk to the downside. Look, this is your starting. I shouldn't put an up arrow, but the only way I can explain it, the stochastic's close to 80%. And it did take out the left side high. Okay, so I'm going to put an up arrow. Technically, it's only a buy signal. It's not a buy mode yet. Now, this bar cannot be A because you have to wait for a trough before you can start your count. So this is A. That says B. This is A. Oops, this is A right here. Remember, that's your starting point. So every peak has to be counted. And this says, because I was just double check, but my eye says it's a couple of pennies above, 22.46, and that is 22.50. That is actually C. So I'm going to say yes. Give yourself, I'd prefer not to give you a 5% risk. I'd say maybe a 2% in points during 2022, maybe 21.80, and I'd try to let it, if it can go above yesterday's high, I would raise that a little bit, and that actually is leg C. And if C can continue today, you need 22.29 would continue C, and 22.30 would start an extension of C, and that's really what you want. You want this still to be in C as it's going up. I don't want this to be peak C, and then you get in for D. These where other things can happen. And my target would be the bottom of this gap candle, and that's at 23.61. If it can even get into that bar, that is just so far away. Or like now, I'm going to be a little bit more conservative. I'm just going to say 22. If it can get to 22.90 by today's Wednesday, by Friday, that's all you want. Is that MACD is very positive. The relative strength is positive. This is UCO. This is the 2 times long crude oil, USO. And the stochastic will just a little bit higher. And the stochastic goes to 80%. So I do like it as a trade. I don't see it as anything bigger right now. I might, but I'm saying to you, yes. I hope you're listening, and I hope it helps you. Next question came in. Let's see, where did it go? Oh, yes. I do want to get to this now before I get to anything else. And the question was GEV. So I'm just setting it up here. I'll continue the notation because that is a 1, 2, 3. That's a Chapman Wave instant restart. This is F/C that we're looking at right now at 435, up $1.67. GE Vernova LLC. That is the electrical part. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So GE Vernova, and the question is, can you take a look at GEV for long? It's the energy equipment spin-off part of GE. I'm not in yet, but I see the company is in the sweet spot of building gas turbines for AI data centers and also parts to enhance the power grid. I'm not in yet, but the stock piqued my interest. So, okay, so it's done the left side, right side price time match, almost to the penny. 447.50 was the high of January 23rd, slumps down to the 250 area, and a lopsided cup formation, although I did my plumb line from that peak D, which goes to the 19th. We just missed at peak F, and as I say, this is an instant restart, so automatically in the back of my mind, or you can print it, I go F/C, right? And now I'm ready for anything because I've notated in the manner that I'm used to. The MACD is good, the relative strength is very strong, stochastics at 89% fabulous, and the on-balance volume is a tad overbought. So the high yesterday was look at this. We got 447.50 in January. It drops to 250. I would say that's about a 40% decline. And then what does it do? It comes back to 444.0. 444.0 high yesterday. And today, what does it do? It just takes it out by 34 cents. So this is leg F/C, that a close above a round number, certainly at a high, or below a round number at a low, says that, and you go lower, says that you've negated the effect. If there was an immediate pullback and we were now at 439.34 without having gone above 440, I'd say, okay, what's that 440 level? Now it's just something to observe. There are other uses for that round number, but I don't have to discuss it right now. And look at the weekly chart. So what do? It's had a huge pullback before. That's kind of used up. Now the pullback could be, down to this low of just 4 days ago, which is at 387, between 387 and the 200 and the 14-period exponential moving average is at about, right now it's at 396, but where it would be is the 380s. That's ideal. But this is what I'm going to say. This is an IPO back in 2024, comes out at 100, and of course I'm still crying about 115 round number low and open. I'm crying because we could have had GE way back in December of 2 years ago, something like that. And then we would have had all of these as spin-offs, GE Healthcare, GE itself, GEV. I mean, well, anyway, we're in GE, we're not complaining. GE Vernova, though, is something different because all it needs to do is to go 1 penny above 447.50, and at 51.51, it starts leg D. D is where other things can happen, but D is also where it can really power highly above the previous peak, in this case C. So I like everything that you discussed, the power grid, the turbines, the gas turbines, just everything that you say, I love. Do you buy it at the high? So here's what I'm going to recommend, because Jason, I know that you look at the long term. If you're prepared to, this has to be a plan. This is not adding to longs that went wrong so that you can make up. You just don't want to do that. What you want to do is to have a plan. The plan is you're going to nibble right here. And you say, I'm buying at the high. I am vulnerable. I am everything. It's not what I like to do. But this is everything about it has the fundamentals, the technicals, and the sassiness. It's right now. It's in the favorable area. So I like it. I'm going to say start your position. But here what you want to do. You're going to start if you are prepared to put up with a loss. It could be 15, could be 20%. But I see this as going. I see this as going towards 470 to 500. maybe in this year, or it could take a full year to do. In fact, the acceleration above this peak G, and there's no other way I can count that, as maybe a G/C, and then it goes to a D in the weekly. I don't want to make it complicated. All I'm saying is that everything about it is great. It's just overbought in terms of what I would want to pay for it. But it doesn't know that it's overbought. It could just keep going. So start your position at 430 if you want. Start a very small position at 433. I'd have two plans. One is that there's a plan that says if it gets into the 490s over the next 3 weeks, I want to add, that's where I really want to start the position. So this is just a kind of a aperitif. This is just a start. And then you want to get in. But that has two positions. That is, one is the position where you want to get in, and that's a split position. And then you want to have something just sitting there loose at about 357, 362 to 357. Hopefully you never get it, because what happens is it just takes off from here. Now, what happens if you start here at 433? It only pulls back 10, 15, 20 points. But then what happens, it suddenly takes out 457. It really says, I'm pushing away from the 440s. Well, I would say to you this, that if you're in the small position and it has a little time before it starts a bigger move up, if it just right now pushes higher, that's what you want, because you're in the small position. It's giving you a good feel for it, but at least you're in it. Where would I add? Let's just say it's not going... It doesn't know it, but it doesn't want to go down to the 390s. It's going to hang around here just sideways for a little bit and then power right through and go into the 450s. So let's have a plan for that as well. So you got your starter position. Then what I would do if it gets to 452? No. How would I do that? Yes, if it gets above the 447.50, if it closes above 447.50, and all the technicals are still very strong, I'm going to say to you, you can add another small position. It's not ideal. I would like a pullback to be able to get that, but you're going to add another small position. And the one that you've got here at 433 is going to be your core position and the others are trading position. And then we'll go from there. So you just let me know what you've done if you're doing anything. My preference is to say double tops. We've seen double tops in this market over and over and over again, where you see quite a sharp pullback, and then it goes back up. So I'm just saying there is an opportunity here that it makes a double top and turns around. I'll be back in a moment. Basil Chapman, Tiger Conditions Hour. Dow's at 52, S&P's up 2. Kind of a little bit of a struggle today, but still fantastic action when you think of what we've done. Over 1,000 points the other day, and we're still up in these highs. That's fantastic action. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. We're looking at Texas Roadhouse. The question came in. Let me just get to this. I'm just doing the Chapman wave notation. A, B, C, and it's in a D. Oh, so many Ds. That's the reason why I'm saying I think we're just getting a little bit toppy right now. So many Ds and Es. All right. So I started a small position in Texas Roadhouse. TXRH. You just made a mistake. At about 165, and it's trading at 190.75. When the 9 EMA went over, very good. That was a brilliant move. 9 EMA went over the 14. Wonderful. For a midterm trade, if it pulls back, I want to add to my position. What is your view on the stock? Well, first of all, look at that monthly chart. It goes all the way from just a year ago in the 90s. It goes all the way to over 200, and let me just check right now, 280-ish, right? And then it pulls back. Now this is a pattern that I love, and it's called the Chapman wave. The month is not even half over, but I'm just going to put this in to show you what I'm looking at, the Chapman wave falling axe formation, right? So just imagine that it stopped right here. It hasn't, but I'm just putting it in. So that's the monthly, but the technicals are not great, except that beautiful 9 is way over the 14 in the monthly chart. The weekly chart right now has just gone L, and the week is only half gone, so we're still waiting to see what happens, but it's a leg A. Now, this is very unusual. This went... there's no other way I can count it unless I've made a mistake. Oh, I might have made a mistake. I don't usually. 104.68, 104.55. I thought there was something wrong. For it to make a mistake like that, it's very unusual in a chart like this. Let me just have a look. There it is. So that's a D, and then it goes, very good. Okay. I'm doing this all over, sorry. I'll do this while I'm talking. So that's a D. This becomes A, B, C, D, E. Oh, it still doesn't work, huh? Oh, isn't that interesting? Oh, my. So that's a peak. A, B, C, D, E, F, G. Okay, I knew there was something wrong here. That is a G. I'm just going to do this very quickly. I'll make a change to it later. But right now, that is a G. I thought there was something wrong. That's the start of a brand new move to the upside right there. So there's your peak D. There's a move to the upside. And now it's gone A, B, C, D. And that's an alternate count E/A, F/B, G/C, but it turns out to be a G. Whew. I thought they're very unusual. Okay, now your question is where to add. So just on a purely visual basis, I would just say 182 to 176 is kind of the area. But if it does that immediately, if it just goes down like that, it says it's going to take quite a bit to get back. If it doesn't do that, but it just pulls back to 186 to 182, and then makes a higher high, that's where it's going to go even higher. And in this environment, to have gone from the 7th of April in the 149 area to 190, that's outstanding action. So what I'm going to say to you, Michael, is this. You've got your position. It's a really nice position. I don't see it going back there unless the entire market pulls back very sharply. And I'm getting to the point where I'm thinking when this is all over, this particular phase is over, we might get a surprise time and price move. And don't be surprised. But at this particular point, everything is headed towards at least those levels that we were looking at next week, that as a possibility in instant restarts, we could go a little higher. I include this. This is in leg D with a doji candle. If it makes a slightly higher high tomorrow, that's going to be a leg E, maybe a slash A. But when it's this tiny, there's a better chance that it's going to be pulling back to the 186 area. So as I say, let's just give me a yell. When you see it pulling back, I want to see whether or not I want to let you pull the trigger again on a pullback under 185, because at 182, that's kind of where I'd be looking at in this particular move, and the 9-period moving average is at 180 right now. So it doesn't look like this is going to pull back unless, as I say, there's a sudden move in the market. You've entered great. I don't want you to get in for the second one and then see it come down almost to your level where you got in. So let's do this as judiciously as possible. Don't even think of adding right now, because you want to be getting a pullback that says, I'm pulling back, ready for the next move into the 198 to 205 area. And I have to, right at this point, it could do that very quickly. And in fact, make a note. I'll put this in today's Wednesday. By Friday, I'll put Friday, look at TXRH. And you better get your symbols right, huh? It's not TXTH. Okay. I just had to figure Rhodes, it must be an R. Okay. So that's what I'm looking at, very strong. Next question came in, AVGO. Yeah, so this is Broadcom, AVGO. They should have stuck to Broadcom. Oh, I haven't up. You know that this has been notated since the beginning of time, and I've just lost that notation. God, that's infuriating. Peak A, peak B, peak C, and it fails at peak C. Comes down. That's a D, and that's an instant restart right there. 1, 2, 3. So that goes A, B, C, D, E. DE. So look at that spectacular move. This is a beautiful. Look, this is like the one we were looking at. Look, it's the same pattern with a single leg A and the huge leg A in the weekly chart. So this is great because now this has got a double top already. Avagio, which is Broadcom, at 231.88 the week of the 20th of December. And then January the 24th, a month later, it goes to 249.59, just under it. And then it makes that U-shaped pattern and it drops sharply, the drop bucket, we used to call that. I haven't used that term for a long time. The daily is at peak A, B, C, D, instant restart. That's what you want to see now for the Texas Roadhouse. You want to see a gap up tomorrow. I don't know if it can do that, but this is great. Because if it gaps up, then the chances are that this, let me just do this live. No use just talking about it, let me just do it. So from the 140, just under 140 goes peak A, huge peak A. There's another little A right there. And another little one there. But let's just say that's your B. There's your B. There's your C. There's your D. Instant restart. I always put the circle in right there because I want you to know where those are right there. But when you gap up and then you go way from 207, you go into the 232 area, I think more E than E/A. In the back of my mind, I'm thinking E/A, but I'm going to put an E. Why? Because this looks like it's going to go to an F and a G, and then it's going to pull back sharply, and then it might want to retest that to go to a D. So in the meantime, back at the wrench, this is your pattern right here. Let me just straighten that out. So look, I should go to the top of this candle right here, right? But that's up there. So I prefer right now to go to the body and say, oh, look at that. It went right through the body. Now I have a legitimate reason to go up there. And what do? I go click, click. And there's your Chapman Wave Inside Track Repellent Zone. I'll change the colors as we go to the break. Dow's up 58, S&P's up 6.43. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, I said that to subscribe to my opening call. I think the market's going to stall somewhat today. So let me just go back to AVGO, which is Broadcom. So it's right at the resistance level. If at any point, this looks great. It's in leg E. Look, all the technicals of the day except the on-bounce volume, which is a little overbought. Stochastics at 95%. That's what you want. Now, this is not going to last forever. So at some point, that stochastic is going to pull back and go back down to the 20% level. But at this point, it's really looking good. So all I can say is that it needs to tackle. This is a weekly chart, but that's not the point. The point is that this downtrend channel has to be broken in the falling axe formation. You want to see make it 242.80. So that's about another $10 higher. Another $10 higher says, you know what? It's going to tackle the next level of 249.59, and then the December high of 251.88, and this is really good. Where's the support? Support right now is at 220 to 214. Let me just do this quickly. I got asked about real quickly. I lost it now. THM. Be real careful. This is trading at this is International Tower Mines. a double top, C1, C2, and a peak D in the daily chart. It's trading at 68 cents. If it breaks 60 cents, that 200-period moving average of 0.57 is a target. So the real question is gold. Yes, gold has done that dreaded H pattern. GDX has done the dreaded H pattern, and it's down at the target. The first target level is 45. It's at that 45.36 level. It takes out 44.80. That whole 44 to 43 area will be a target. The resistance in the GDX right now is at 46.80. So with that said, I'm wrapping it up. We'll still remain only long positions. They are working really well. They've gone even a little bit higher today. I'm waiting. I would love a pullback so we can add to some of them. And we'll see what happens, because this is a market now that is getting stretched, but there are still technicals that are looking good. I'll be back tomorrow. Have a great day. Check out my opening call daily news.